You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Today's 3/25/21. Well, we've been getting a lot of rumblings, a lot of noise from the Fed. What does it all mean? Higher interest rates, lower interest rates, no interest rates, just print the difference. What do you think is going to happen? We'd like to get your opinion, so send us an email to kl@kerrylutz.com. Well, right now, Joe Gissy is with us. And Joe, you are CEO and founder of Strategy Marketplace, which you explain is a wealth tech platform that helps individuals, financial professionals manage assets through tactical robo-advisory. I guess that's okay as long as the Terminator doesn't infiltrate your system and you become part of Skynet, right?
Yeah, that is kind of a mouthful. It's a blend of different things and under one platform. But yeah, you hit the nail on the head. We're a new wealth tech platform, tactical strategies. It's not passive. It's not your buy and hold. These are strategies that move in and out of the market depending upon what's actually happening in the market in real time, math-based algorithms. And yeah, we help individuals, which were typically some of this stuff was reserved for your institutional investor and hedge funds. And we've managed to capture some very unique strategists that have been in the market for the last 30 years and put them under our platform and bring them to individual investors for a fraction of the price.
All right. So what's it? Give me a day in the life of the robo manager.
Day in the life, and this is interesting because we're talking about the Fed and their announcements and what we're looking at for the growth of the economy. But we do focus on the economy. That is something that we have to focus on. But we are a rules-based system. We are a math-based system. So the cool thing about that is we get to see, we basically watch what's going on in different indicators that we have, whether that be something that's a month-to-year indicator, a quarterly indicator, or even something that's a little bit long-term. And we see what triggers have hit in the market, either on the previous day or what's going on in that morning. And that will really tell us which way our algorithms are going to trade and whether or not, we're going to do no trading or whether we're going to get out of the way because we're seeing that, hey, we're getting a bunch of red lights coming up here. Some of the indicators are going to negative. Certain sectors of the market we might need to step out of and maybe move to a cash position and sometimes to a gold position. And maybe when those all start turning back around to positive, then we start moving the accounts back to the positive and back into equities. Now, we don't do that from a human level because it's all based on the math and the algorithms. We let the math and science tell us what to do, and then the triggers go into place, and then they automatically rebalance clients' accounts. So we're just making sure we support clients. We make sure that they understand kind of what's happening with the financial markets, and we try to help steward them to whatever goals they have, whether that's just building wealth or a full retirement plan, and we try to encompass all that under our platform.
All right. So how often does the algo or the robo rebalance portfolios? Is it by the minute, by the hour, by the day, by the week? How's it work?
Yeah, it all depends. It's not as quick as by the minute, by the hour. We do take into the types of accounts an investor could have. So if somebody has a standard taxable, not what we call non-qualified account, you're not going to need something that's going to rebalance so quickly because you're going to incur a bunch of tax consequences due to that. Now, if it's something that's in a qualified or retirement type of account, you can be a lot more active because all those taxes, everything's going to be deferred down the road. But most of the triggers, we definitely have quarterly triggers. We have triggers that happen on the monthly basis. That's usually one of the more robust strategies. If it happens where we move something each day, which isn't too likely, but when things are very volatile, it can move one day and move back out the next day. But if something like that were to happen, that's when we're really having some, destabilization in the market. So it doesn't happen quite every day, doesn't happen on the hour, but you can expect to see something happen every few weeks, definitely every month, and for sure every quarter.
All right. So it varies, I guess, depending on what's going on in the market. What types of data is it using to make these decisions? Because it is making decisions.
Yeah, no, that's a fair question. We're looking at the prices of a wide variety of ETFs or stocks. We use all kinds of different moving averages. We're using different price to earnings ratios. There are different mechanisms for each of the indicators. Like I said, there are some longer term indicators that, we have, we use certain mechanisms for. We have some quarterly indicators that might look at other mechanisms. And then the monthly, we have a really nice stock portfolio that's on a month-to-month basis. And we're really just trying to take the top trends in the market. So it's looking even at, who are the top performers, who are the stocks that in the S&P 500 are moving up in the rankings. And, those would be the ones you want to keep in a portfolio, which are the laggers. And once they're the laggers, we're going to move them out. Traditional stock portfolios and traditional financial models, they'll throw a group of 30 stocks in a client's portfolio, and they hold on to it and they just keep holding on to it, and they don't necessarily rebalance it that often. But if you start rebalancing it on a more consistent basis, even on a monthly basis, you can get rid of some of those laggers and move in and out accordingly.
Well, interesting question here. Is this algo too much of a micromanager, like trying to anticipate and call every single turn, and then it winds up acting maybe too often or too quickly before the actual move takes place?
Don't just survive, thrive. The Financial Survival Network.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and now over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion with a 33% IRR. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades on the New York and Toronto exchanges under the ticker symbol TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
No, that's actually a fair question. So that's why with Strategy Marketplace, we actually are encompassing two different tactical strategists. I like to consider it, I give the light switch analogy with people. On one strategist, we have kind of the on-off light switch. It has triggers that once it hits, you turn the lights off, you're going to get out of the market. And it takes a little while for those indicators and triggers to hit. And then, when the market's hot, we'll turn it back on. So those are going to be kind of your longer term. So they're not going to hit every single blip on the radar that could happen. So it won't do the trading as often as what you would expect. And then we have kind of the dimmer switch analogy with another strategist that we have. And they don't necessarily just go completely out of the market. They take positions off the table. So it's, if the market is starting to cool down, rather than just taking everything off and saying, okay, I'm out, I'm in cash, or I'm going to go to something different, they might take, 25% of the position off the table and then another 25%, and they'll slowly move it off the table. So that way you're not going to get too big of a blimp in the portfolio right off the bat, but we can start to see how trends are moving, whenever they are moving either up or down. And it's all done through, supply and demand and trend analysis, really. And it comes down to that. All
right. So I guess this is a trend. So where do the portfolio managers go and hide after all this is implemented and they're out of jobs?
What's really interesting about the time we live in right now is that we have a lot of people who have done a really good job creating portfolios and being portfolio managers. And I'm seeing a lot of them start, schools, education programs, training programs. And I'm finding a lot of unique strategists out there because of that. Now, because we're a marketplace, we're going to add some more strategists to our platform as we go along. We have a couple caveats to that. They have to have a track record. They have to be pretty well known in the industry, and they have to be a little more active or tactical in nature. Because given the fact that, like you said, right at the beginning here, that the algos are kind of controlling the market, we need to make sure that we don't have a passive strategy, or something that's going to basically just ride the market wave, because there's no point for that. If you're going to do that, then just go buy your no load index fund and call it a day. But most investors can't stomach the actual ride. They need to know that somebody or something is getting them out when we have a big market decline like we had last year, when we lost close to 35% in 5 weeks. You need something to trigger to get you out, or at least so the investor has the confidence that something is paying attention to their investment portfolio.
So what did the algos do? What did the robo do last March? How did it perform?
Yeah, so this is the first time. We just launched the blend of robos in February of this year. So we actually augmented those two together. But both strategists by themselves back in March of last year, I can tell you, and I'm still a wealth manager myself. I still have clients. And it's always, we always have to watch what numbers we give out there. But I can tell you, with the way we structure our portfolios and the way the algorithms were working, when I saw that the markets were down, around 20% at one time, I was looking and waiting for some phone calls to happen, waiting for those clients to call me. And I started noticing, we have portfolios that are down 5%, 6%, maybe even 10%. And I'm saying, that's not as bad when you see that the market's down double, or the market's even down triple. And by the end of the year, we had portfolios that were up in the double digits. And I don't want to give too many quotes away, but they did significantly better than the S&P 500 and the Nasdaq and the Russell.
Really? Interesting. So there is something to all this. And do you think they can outperform the human type portfolio manager consistently?
So one of our strategists has strategies going back 30 years, and they can. The typical time that they outperform the traditional money manager is during times of volatility, or times when we actually have the economic downturn. When you're looking at Warren Buffett, he's a long-term investor. He put a challenge out to, I think, hedge fund and money managers a couple decades ago, or a decade ago, and asking, hey, if anybody can outbeat me, I'll pay you. And I don't think anybody really took the challenge. But, I kind of wish we did. I kind of wish our strategists did, I should say, because I'm looking at what they've done, and they have consistently outperformed. Now, typically on an upward rising market, the bull run that we've had since 2009 on, and not counting the blip from coronavirus, it is hard to beat the market for most money managers. But again, once you hit that volatile time, or the markets start taking, a bath, that's when these algos really kick in and save you that headache and save you that downturn, where it's really about drawdown at that point. And if they get out early enough and they get back in soon enough, that's when you're really going to see these things outperforming everybody else. And it's not a matter of if. We always know it's a matter of when, and we know cycles continue to happen. They'll continue to happen far into the future.
All right. Did your algorithms publish any predictions for the future before they do the rebalance?
They don't. I think most of the time, one of my strategists has been traditionally an advisor-only money strategist. So he's got a big subscription service on that side of the business, and we don't try to do predictions. And we try to just look at what the facts are, what's actually happening with the markets right now, and we try to stick into that sphere. Now, another strategist, the other one that we partnered with, they do a good job giving a good economic forecast. That's the one I told you that is kind of like the dimmer switch. They have a consumer subscription that they utilize, and they make some publications and say, here's where we think the market's heading. They do a good job kind of, I think that's a good precursor gauge that they do publish for public use. But that's also part of a consumer subscription service that they have.
Interesting. All right. Well, if people want to find out more about this and connect with you on the web, where do you go?
Hey, you just go to strategymarketplace.com. We're up and running. We're live. Clients are opening up accounts. You can open up an account in as little as 5 minutes, and you're off to the races.
All right. Hey, well, if you got any questions about this, which I find really interesting, you got a question for Joe, I will forward it off to him. Just send us your email to kl@kerrylutz.com. Don't forget, go to the website, financialsurvivalnetwork.com. Sign up for your free newsletter. Joe, really interesting service. We'll check back with you in a few months after the next crash, should it occur, and let's see how your algorithm did then.
Awesome, Kerry. I appreciate it. Thank you for having me on.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.